Explain 2 ethical issues that need to be adhered to in the marketing of Islamic products and services. Gaspard, in answering the question, says one ethical issue is not to invest in forbidden activities. Evelia says do not market certain entertainment secular products such as blue films. Abraham Ayom says Sharia compliance. Abraham, you have to be specific. Which part of Sharia? Vincent says prohibition, usually riba, prohibition. DML says do not invest in interest generating business. Ethical, is that an ethical issue or is just a principle? Gambling speculations are prohibited under Sharia law. Gambling speculations are prohibited under Sharia law. Now in this question, please underline marketing. Issues, ethical issues in marketing. Ethical issues in marketing. So some of the answers are correct, some are general, others are not correct. Now, candidates, when addressing ethical issues, whether the issues are in Islam or conventional business, there are some points that must come out when you are answering questions related to ethics. Don't forget to mention points like truthfulness, transparency, respect, fairness and justice, modesty and decency. Those are points related to ethics. So you only need to explain truthfulness, respect, and so on in relation to marketing, because the question is specific. Ethical issues in marketing of Islamic products, all right? Products and services. So how do you now explain, say, for example, truthfulness or transparency? Because Islamic marketing ethics candidates prioritizes honesty. It prioritizes full disclosure in promotional activities. And that means avoiding deception or avoiding misleading claims about the product or service. Because the question refers to products or service. You understand? So that is truthfulness. Another ethical issue is transparency. And transparency extends to the terms and conditions of the transaction, which ensures that consumers have all the information they need to make informed decisions. And that should even cut across, not only in Islamic marketing. When marketing, one is required to be transparent. You don't, for example, sell a product while you are marketing, giving the ingredients that are not available in that product. That is not being transparent. If you are selling a product and it does not have a certain ingredient, then you need to indicate that ingredient B is not included in this product or service. That is an ethical issue. Transparency, right? The third ethical issue is respect for consumer autonomy. Respect is an ethical issue. Islamic marketing ethics emphasizes the importance of respecting the consumer's freedom to choose. Autonomy means independence. Freedom to do what? To choose. And that means avoiding any form of coercion or undue influence, such as high pressure sales. We have some tactics that businessmen use, like high pressure sales tactics. Others exploit vulnerabilities. And that is to mean or to say that consumers should be presented with clear information which allows them to make their own choices based on their needs and values. When marketing products, that is very important. Give consumers information about the product, then allow them to make their own choice. That is consumer autonomy, consumer independence, and it's an ethical issue. Do you understand? So when answering these questions, make sure you be specific, because the question is specific. Your points should be related to marketing. Another ethical issue in marketing Islamic products is fairness. Fairness. Islamic marketing ethics promotes fairness and justice in all aspects of the transaction, including pricing, distribution, customer service, and so on. And that means avoiding any form of exploitation or any form of discrimination, which then ensures that all consumers are treated equally. All consumers are treated with respect. And fairness also extends to the suppliers and other stakeholders involved in the production and marketing of Islamic products and services. So you see, fairness, justice. Someone talked about interest, gambling, prohibition under Sharia law. Okay. Prohibition. When explaining prohibition in Islam, you've heard of the term haram. Islamic marketing ethics prohibits marketing of products or services that are considered haram or forbidden. And that may include, someone talked about blue films. We have products like alcohol, pork. Someone talked about gambling. That is correct. Gambling. As well as services that involve usury, okay, or exploitation. So candidates, those are some of the points. You are only required to provide 2. I've given you 6. You can add things like modesty, principles like decency. Modesty and decency is also an ethical issue in marketing, in Islamic products and services. Islamic marketing ethics emphasizes modesty and decency in all forms of advertising and promotion. And that means avoiding any images or messages that are sexually suggestive, messages that are offensive, or messages that are disrespectful to Islamic values. So that is April 2024 question 5A. Let's move on to question 5B. Question 5B. The managing directors of three profitable listed companies summarize their company's dividend policies as follows. Company A has deliberately paid no dividends for the last 5 years. Company B always pays a low dividend per share after adjusting for the general price index and offer regular bonus issues. Company C always pays a dividend of 5% of earnings after taxation. Each managing director is convinced that his company dividend policy is maximizing shareholders' wealth. Required: identify the dividend theory applied by each of the three companies. Identify the dividend theory applied by each of the three companies. What is your take? Company A, what is your view? Company A has deliberately paid no dividends for the last 5 years. What do you think? Evaluator says non-relevant. Non-relevant, more MM, 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 Modigliani Miller. Dividend, is it relevant? Non-relevant, yes. Relevant, dividend irrelevant. Non-relevant is the same as irrelevant. Dividend irrelevance theory. Why would a company deliberately refuse to pay dividends for 5 years? Yet we know that people invest so that they can earn dividends, but this company is not paying dividends. Evaluator says company A relies on investment history and earnings. Yeah, that is true. DML, that is true. It is true. It means that dividends do not add value to a company's stock price, or a company payment of dividends have no impact. Abraham, that is true. That the theory suggests that dividends do not add value to a company's stock price. If dividends do not add value, then what adds value? Abraham says dividends do not add value. Then if dividends do not add value to the stock price, then what adds value? Can you answer that? Evaluator says that company A relies on investment history and earnings, not dividends. DML, in a perfect market, the value of a firm is not affected by its dividend policy. What affects it? If not affected by dividends, then what affects the value of the firm? Evaluator says its earnings over the past 5 years. Investors will only look at the earnings over the past 5 years. So I think most of you got the answer right, that the theory suggests evaluator says investors will only look at the earnings over the past 5 years, that is income statement. Now you are referring to the investors, potential investors, I think, but you need to remember dividends are not paid to potential investors, but they are paid to the existing investors. If the company is not paying dividends, and we know investors buy shares to earn dividends, then what will motivate potential investors to invest in this company yet is not paying dividends? Investment decisions and capital structure affect the value of the firm. Investment decisions and capital structure affect the value of the firm. That is true. Affects the capital structure of the firm. It may be more perfect to say affects the value of the firm, not just the capital structure, but the value of the firm. And by value of the firm, we are referring to the value of a share. Shareholders are interested in the value of their shares. If they are not earning dividends, then the value of the shares should appreciate, and they enjoy what we call capital gain. Capital gain. Evaluator says potential investors will look at how earnings are behaving relative to potential investors. But evaluator, our interest is not on potential investors, but on the current investors. The current investors. They are not being paid dividends. They are not being paid dividends. Your point is true, but we are focusing on the current stockholders. Though they are not paid dividends, they enjoy capital, what we call capital appreciation. Capital appreciation. They enjoy capital appreciation. Capital appreciation. They enjoy capital appreciation. Someone says relies on tax differential theory that dividends are taxed higher than capital gains. It seems you guys have been studying, you are talking finance. Someone is talking about tax differential theory, that dividends are taxed higher than capital gains. Now, your answer should be in relation to Modigliani-Miller theory. Modigliani-Miller theory. Your point should be related to because the question is identify the dividend theory applied by each of the three companies. So the dividend theory applied is Modigliani-Miller or theory, and that will earn you the 1 mark. The questions I'm asking are not related to what has been asked here. I'm asking that question because you never know, maybe in your sitting you'll be asked the question I'm asking. Here you are required to just state the theory and earn the 1 mark. But I'm asking, what is the rationale behind? In explaining, then your answer should be limited to Modigliani. This theory suggests that in a perfect market, just as one person had indicated, that in a perfect market, a company's dividend policy does not affect its market value or shareholders' wealth or the value of a share. That is to say that shareholders are indifferent to whether they receive returns in form of dividends or capital gains. So you need to understand that when you invest in a company, when you buy shares of a company, as a shareholder, you may enjoy the dividends, which may be paid regularly, or you may enjoy capital gains. That is to say, if you bought a share at 5 shillings, over time, the value of that share may appreciate to 10 shillings, meaning that there is a gain, capital gain of 5 shillings. So Modigliani and Miller argue that in a perfect market, the dividend policy does not affect the value of a share. And you need to understand that the value of a share appreciates based on the forces of demand and supply. the value of a company's share will appreciate if there is high demand for that share. You understand? You understand? So company A's decision to not pay dividends for the last 5 years could be based on the belief that reinvesting profits into the company would lead to higher capital gains for the shareholders and thereby offsetting the lack of dividends. Because if a company does not pay dividends, then it means that that money is reinvested in the company. And we know retained earnings is one of the cheapest sources of funds. So a company may choose not to pay dividends so that the money that could have been paid in form of dividends can be reinvested in the company at a lower cost, which still benefits the shareholders. Do you understand? That is company A. Company B always pays a low dividend per share after adjusting for general price index and offer regular bonus issue. The question is, identify the dividend theory applied by this company, company B. Mani says regular plus extra. Company B always pays a low dividend and offer regular bonus issue. Regular bonus issue. Regular bonus issue. Regular plus extra. But we read here, pays a low dividend and offer regular bonus issue. Irene, clientele, residual. Residual theory states that a company should prioritize investment opportunities and only pay dividends from the residual earnings after funding all viable projects. Residue, from the word residue. Okay? This company could be applying that theory. Low dividend means that this company had the money to pay, but it's paying low dividends. That means that a big percentage of the earnings must have been used to invest in opportunities. Then what remains is now paid as low dividends. What remains, the residual. Low dividends means that a big portion of the retained earnings is invested. The theory states that a company should prioritize investment opportunities and only pay dividends from the residual earnings after funding all the viable projects. So the low dividend ensures sufficient funds for investment. The low dividend ensures sufficient funds for investment. So the company may pay 70% of the profits, then 30% or 20% is paid in form of dividends. What remains? Residual. So the low dividend ensures sufficient funds for investment, while the bonus issue, because after paying, then there is a bonus. Do you get that? The bonus issue is a reward to the shareholders. Okay, bonus. Because bonus, what is bonus? Bonus are just free shares. The company gives the shareholders free shares. Instead of giving the dividends, they are given free shares. So that compensates the shareholders for the low dividend that has been paid. Low dividends, but there is bonus. Do you understand? Instead of giving all the money in form of dividends, the company reinvests a major portion of the money into viable projects, then later on pays low dividends, then the shareholders are given bonus. Bonus issue reward shareholders by increasing their stake in the company. A bonus issue is free shares. You understand? So the theory here is residual. DML was correct, residual dividend. How about the third company? Company C always pays a dividend of 5% of earnings after taxation. Always. Always pays. Company C always pays a dividend of 5% of earnings after taxation. What do you think? Abraham says regular dividends. Regular dividends or constant? Constant. When you say something is constant, what does that mean? Fixed. Fixed payout ratio. That is correct. Give me another synonym. Stable. Stable dividend policy. This is a stable dividend policy. It is fixed dividend policy. Fixed payout ratio. All those are answers. And this theory suggests that companies should maintain a consistent dividend payout ratio. Then I'll ask you the question, why do you think that is the reason why companies should maintain a constant dividend payout ratio? What could be the reason behind the theory? Because this theory suggests that companies should maintain, and this company, see, that's what it's doing. It's maintaining dividend of 5% of earnings after taxation. Maintaining, that's a constant, it's fixed. Why do you think it's important that a company maintains a fixed dividend? Someone give me the answer. For predictability. For predictability. DML says for predictability. And that is true. Predictability. It's important if you are for a shareholder to know that this year I'm going to earn, say, 50,000 in dividends constantly, so that the shareholder can also plan. It's predictable. Understand? Maybe a shareholder can use that money for having an annual holiday or something. There are people who would want to have that predictability, stable returns. These are stable return. It provides predictable income to the shareholders and can attract investors seeking stable returns. The investors who may want stable returns. Vincent said for assurance. That is correct. For assurance of shareholders of their return, not investment. Assurance of return. Return on investment. So that is what was required there. That tells me you've been studying. That's quite encouraging because you've answered the question appropriately. Now let's move on to the easier part of the question, because these are ratios. Ratios. And you see the question is balanced. If you can't get the theories, then calculations, because the theories here are just 7 marks. This question theory 7 marks, the rest 13 marks for the calculations.